What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader with your boy Marcy. And today we're going to be looking at a simple and clean analysis for pound yen. And I'm starting on the weekly because I just wanted to bring your attention to what is actually happening on the weekly. So if we just go back a bit and mark out where our last known higher high was formed and it was broken, then you can start marking a structure from that point. So you can see that a high was formed, we then broke the high, a new higher low formed, we then pushed up and created these new higher highs. And in turn, what that means then is that this is your higher low from a weekly perspective. So basically, what you can see is that from this point, we actually have a break of structure to the downside, right? You have this anticipated or the actual break of structure to the downside. We have a pullback to what seems to be around 60 to 70% level on the weekly time frame. So I do think that from here we could potentially see another leg to the downside from a weekly perspective, right? So it's key to keep in mind what the higher time frames are actually doing with regards to structure and how it's looking now. You can even see how to actually trade one weekly candle. Bear in mind that you're only going to be focusing on what's going to happen in the next 5 days, which means one weekly candle. In my opinion, the next candle has a higher chance of pushing bearish than it does of pushing bullish, just the way it is. Like the way structure has formed, we had a shift of structure to the downside. We then had this low retracement into a key level, which is your 60 to 70% retracement levels. And then now what we can see is that we have a clean bearish candle pushing to the downside with what seems to be quite a bit of momentum and volume on this weekly candle, right? So just basing like and giving ourselves that overview and that story, you can see that the next candle could potentially push bearish, right? Now let's see what's happening on the daily time frame. So what you can see is that this we had this impulsive push to the downside. And if the weekly has shifted structure, then more likely than not, the daily has shifted structure to the downside too. So the daily shifted structure in and around these areas right here push very impulsively. And you can see that if I just did, if I marked this, what is that with that thing? Data range. So if I mark from here to there, that is about 17 days, right? But if I took this and I moved it from where the impulsive move actually stopped to where we currently move, so that was 17 days, the impulsive move, right? This retracement from where we ended and created this low has been 102 days. So we had an impulsive move for 17 days and we had a retracement for 102 days, right? So this 102-day retracement that we have right here clearly signify that this is a clean retracement. And like what I like is that after you have a big move to the downside, you have a retracement that takes a long time. And the reason why I like that, what it means is that it's basically building up orders in order to catch a very impulsive move again in the anticipated direction of structure. And so that's why I like this 102-day move where we were moving basically sideways and we're just retracing into a key level. Now, when you're looking at it from a daily perspective, there's not really too much to see besides heading into this key area in the market right here. And then you can see that we have slowed down significantly. And now you can start to see that momentum shifting to the downside. And how do I see that? Look at like the candles into this key area. You can see how tiny they are as they get up into the key area. But then when we get into this key area, what do you see? You see large bearish candles to the downside, like, and these bearish candles are like double or triple the size of these bullish candles into this key level. And so that is like key things that we need to note in order to be able to just anticipate where price action could go over the next couple of days. Now, with that being said, let's actually go down to the 4H and start taking note of what our basically what our into like our weekly, what our week could look like from a structural point of view, because bear in mind that 6 4-hour candles make up one daily candle. And so if you just say there's 5 days, 5 times 6, that means there is pretty much, I think there's like 34-hour candles in a week, right? uh and so 30 candles is enough. If I'm correct, my math might be wrong, my math might be completely wrong, but I know there's six 4-hour candles in one day. 6 times 5 is 30. So there's 34 H candles in a week, right? So you need to be able to determine where those 34 H candles are gonna go, and just basing it off from how the weekly looks, the daily looks. There's higher chances that we are going to push with a lot of momentum to the downside. Now, let's just focus on structure from a 4H perspective. So you can see that we created this high right here, higher high. We then pulled back, and we this was our last known lower higher low, sorry. Then we create these higher highs. Let me mark that off right there. Yeah, you can see we had a shift of structure. So this is actually a break of structure to the downside. We then go into a bit of a range, trying to push to the upside, but failing to make a new high. And then what you can now see is that price action had actually broke structure once again. So now we have confirmed what is like a bearish trend now from a 4H level. And we know that we went into the daily key level. You can clearly see that from a daily perspective, you have those huge momentum candles to the downside, and now you have clear shifts of structure. You have two shifts of structure on the 4H time frame, and what that essentially means is that now you can start clearly looking for sell-offs, right? And to me, I'd be looking for a retracement possibly into here or into these areas, which would probably be 1 hour time frame key levels, like these 1 hour time frame key levels right here. And the reason why I'll be looking for these areas is just because if you just look at how the market tends to move, is that early in the week it will create the weekly wick. And if I'm anticipating the wick or the weekly candle to be bearish, then the weekly wick will then be to the upside first, and then after that it will create the body, and then it will create the downside wick on like Friday or whenever the case may be, like Thursday, late Thursday. So that's our anticipation. We're anticipating for price to pull back a bit, create a lower high, and then see the anticipation order flow to continue bearish. So from your boy Marcy at the Modern Day Trader, please bear in mind that your unmatched perspicacity coupled with your sheer indefatigability makes you a feared opponent in any realm of human endeavor. From your boy Marcy at the Modern Day Trader. Peace out, man.